Go across to Peter McGuire now. He is with us, joining in live from Australia. Peter, thanks so much for taking out time for us. You've been tracking a lot of data. We get your emails in the morning, which says which data to track. A lot of data is pointing out towards a lot of negative asset prices, but asset prices across the world are going up, whether it's Bitcoin, whether it's base metal, industrial metal. What would you have to say? Is this the supply shortage that's taking over all the other fundamentals at this point of time?
Well, Pankaj, I think if anyone knows the answer, then they're going to be sitting here rubbing their hands with glee going, how much further the market has to run. I'll say this, we're in an incredibly unique position as far as that inflation spike, demand coming back from COVID, and of course, a lot of these commodities, if you look at the commodities, the hard assets, were very much oversold. And we've just seen that huge run up, as indicated with crude oil, naturally what we're talking about as far as base metals, and that general, full head of steam coming across those markets. So yes, at the moment, cheap money and inflation are really giving those markets a lot of tailwind.
What do you think is happening? Last 12 years, the case was that as the dollar index rates tend to move up in the US, emerging markets, commodities used to not do that well. Do you think this time around it's changing because US is growing, US consumer is back, and that's the differentiating factor?
US consumers back. I think the global consumer's back in a lot of ways as well. And the other side of it is that US dollar is now under 94. Like it or not, we saw 103 for the viewer's standpoint. That range between 103 and say 89, 88 over the last couple of years, it's really now concentrated around that 94 to 90 sort of handle. So, we've got cheap money. We've got some, we had New Zealand to have a rate rise. We've got a couple of other economies that have seen rate rises. So that whole talk as far as stripping out taper and looking at, I would say, yields and naturally interest rates having a kick up in 22, this is going to be a storyline that it's going to be interesting where the US dollar plays, because I think that there's going to be, in some ways, a disconnect between the likes of Eurozone versus US.
In terms of industrial metals, you think the problem has been that there has been no capex, and now we're talking about crude despite EV making the inroad all around the world the way it is. Crude is making a comeback because there was just no investments in the energy industrial metal space in the last 10 years.
Yeah, may have not been 10 years, but certainly over the last few years, 3 to 4 years, it's been very much trimmed back. And we all understand that. So under investment from a capex perspective, the demand picture hasn't waned in any way. I mean, if we're thinking that we're going to be off our addiction to electricity, and that seems very evident with the likes of, the coal crises and how much coal you're using globally. And India's a perfect example of that. And certainly from an export centric economy like Australia and the huge demand that China goes. So there's the electricity side. Crude oil, 100 million barrels a day consumption or around about. You've got massive demand for natural gas and, of course, heating oil heading into that northern hemisphere winter. So all of those conditions don't go away. And the overall, I think we're all accustomed to having energy, switching a button on and you've got power. So that takes a huge demand to fill that. And there's the storyline. It hasn't gone away. 7.5 billion people across the planet. And I think this decade will be a very interesting one for commodities.